Well, that was when I sold 75 units. But again, I'm using last in, first out. So I'm going to have to peel these units out from the bottom up. So there's enough units in that bottom layer to cover it. So I'll say that all 75 of these units came out of that bottom layer at 60. So that means my top two layers are actually going to stay the same. They actually will not be affected. And then my bottom layer, where I used to have 90 units, now I only have 15. So now I'm ready to total up my cost of goods sold under this method. So I've got the 200 units at 54. I've got the 75 units at 60. I will just total these two up. That's 15,300. So ultimately the answer that I get for cost of goods sold under the LIFO method is 15,300. So it's a slightly different answer because we peeled the layers off in a slightly different manner. But again, that's another possibility. We have all these different possible methods that we can use. Now, the next method that we're going to use is the weighted average method. Under weighted average, this method, I want to instead of peeling the layers off, I actually want to calculate an average. So it's a little different, and it's actually going to require more work. I'm not going to peel off layers of inventory. I'm going to compute an average price each time. So that's going to require more calculations. So initially, again, I start off with my beginning inventory. All I have to do is just copy that over. It's going to be the same, no different. And then I copy that once again on the next date. And then I have another purchase, so I build up another layer of inventory. Every time there's a price change, I keep building up the different layers. So it's not really going to change until I get to the 9th. And on the 9th, that's when I have my sale. I'm going to sell 200 units. Now, when I sell these 200 units, which units am I selling? I don't know. I'm not going to assume anything. I'm not going to peel the layers off. I'm actually just going to calculate an average. So I know that I sold 200 units at, but I don't know the price. So I'm going to go over here to the right hand side and actually figure out what the average price is at this point. So I've got 55 units at 50. That's $2,750. I've got 200 units at 54. That's $10,800. I'll add these two together. That's a total value right now of $13,550. Now, how many units do I have right now? I've got 55 and 200, so I've got 255 units. So if the inventory is worth $13,500, but there are 255 individual units, if I divide, that means the average price of every unit is $53.14. So that's the price that I'm going to use here, $53.14. And what do I have left at that point? I have 55 units left at the average price of $53.14. So that's how the average method works. Now I have additional purchases, so I'm going to copy that layer. Then I've got this additional 65 units of 55, different price. So that creates yet another layer of inventory. Then I'll bring these down once again to the 25th. Then I had these additional units that I purchased. So again, a new layer. And I just keep building up my layers of inventory until I get down there to the 29th. Now I'm going to have my final sale. It told me that I sold on the final sale 75 units. Price-wise, I don't know the price yet. Again, I'm going to go over here and calculate an average price. So I've got 55 times $53.14. I've got 65 times $55, and I've got 90 times $60. And then I will total that up. The total value of the inventory right now is $11,898. How many units do I have right now? I've got 55 and 65 and 90. I've got 210 units right now. So the value of the inventory divided by the number of units gives me an average price of $56.66. So that's the price that I'm going to use. And how many units do I have left? Only 135 units at the average price of $56.66. Why 135? Well, if I had 210 and 75 of them are gone, I've got 135 left. So now once again I'm ready to calculate my cost of goods sold. I've got my 200 units times the average of 53.14. I've got my 75 units at the average of 56.66. When I add these together, I get $14,877.50. So that's how things would look if I was going to use the weighted average method. Now that completes part one. So that gives us FIFO, LIFO, weighted average. Now I'm going to work on part two. Part two wanted me to calculate the cost of goods sold once again, but this time using a fourth method called specific identification. Now this method is a little bit different because under specific identification, we are not going to calculate an average, and we're also not going to peel out any layers. Instead, what we're going to do is they're actually going to specifically tell us which units were actually sold. That's why it's called specific identification. So it's going to look pretty much the same as the other methods until I get down there to the March 9th sale. Now this time, to use specific identification, they're going to have to specifically tell me which units were actually sold. Well, that information is included at the very beginning of the problem. Under the requirements, part two, it wanted me to calculate cost of goods sold using specific identification method. But then it says, assume that the March 9th sale consisted of 40 units from beginning inventory and 160 units from the March 5th purchase. So what I'll do there is say, okay, since I'm using specific identification, it said that assume that 40 units came from beginning inventory, which would be a price of 50, and then it said assume that 160 of the units came out of the next purchase, which was at a price of 54. So they're literally telling me which units were sold. So that means in that first layer, I used to have 55. Now I only have 15. And in the second layer, I used to have 200. Now I only have 40. So see how that looks a little different. And then I'm going to copy these two levels, these two layers down to the next date. And then I'm going to add on this additional purchase, the 65 additional units at 55. And then again, I'll copy these down once again. Sometimes it gets a little repetitive, but we do have to be very detailed about this. So now I've got all my layers at the end of the 25th. And this time, because of how the sales came out, I've got 4 different layers. So I'm just building up layer after layer of inventory. And then I get down here to the 29th. Now that's when I sold 75 units. I need to see what they're going to tell me about that. It says here that assume that the March 29th sale consisted of 20 units from the March 18th purchase and 55 units from the March 20th purchase. So it's going to be 20 units from that purchase, which was a price point of 55, and 55 units from the March 25th purchase, which was a price point of 60. So what I'm going to have then will be my first two layers. They're actually going to remain unaffected. So I can just copy those down. Now, where I used to have 65 units of 55, 20 of those are gone, so I only got 45 units at 55. And of the 90 that I used to have, a lot of those are gone, so I've only got 35 of those left. So now, as before, I'm ready to figure out my total cost of goods sold. So I've got 40 units at 50. I've got 160 units at 54. I've got 20 units at 55. I've got 55 units at 60. And then I can just simply total all of these, and I get a total of $15,040. So that means if I would use specific identification, assuming the information that they provided me, they would have a cost of goods sold $15,040. So that completes part 2. Now for part 3, on this part they want me to calculate the gross profit. It's very easy to calculate gross profit. It is simply the sales minus the cost of goods sold. But they want me to provide this calculation for all 4 levels, all 4 methods. So I have columns set up for FIFO, LIFO, weighted average, and specific identification. I have an area for the sales, the cost of goods sold, and gross profit. And I just went ahead and inserted a little formula here to grab the sales and deduct the cost. So it's just sales minus cost. That's profit. Now, cost of goods sold, where am I going to get that? Well, I've calculated that. Back when I used the FIFO method, I got a cost of goods sold of $14,650. So for FIFO, $14,650. When I used the LIFO method, I got a cost of $15,300. So $15,300. Under weighted average, I got $14,877.50. $14,877.50. Or it's rounding it up to the dollar. And then under specific identification, I got $15,040. So $15,040. So I literally just take my cost of goods sold from the different versions of this that I did under these different methods. Now, once I could figure out the sales, then I'll be finished, because if I plug the sales in, this will calculate, it'll deduct the cost and show the actual gross profit. Now, the good thing about sales is once I calculate that, it's actually going to be the same across the board for all 4 methods, because this is where I'm finally going to use those retail prices. So I had 2 sales. I had a sale right here where I sold 200 units at $80, and then I had a sale where I sold 75 units at $90. So basically, if I go off to the side here, I sold 200 units at $80, and I sold 75 units at $90. And if I add those 2 up, that's a total of $22,750. So I can plug in $22,750 across the board for my sales. So as a result, sales minus cost of goods sold gives me the gross profit. So I'm saying that if they elect to use the FIFO method, they'll make a profit of $8,100. If they elect to use LIFO, they'll make a profit of $7,450, $7,873 under weighted average, $7,710 under specific identification. So you do get a different profit depending on what method the company decides to use.